Carnival. I'm the Chuck in the Markets Up Chuck. And, today's blog was titled The Importance of Earnings. We talked about how in the long run there's a long-term correlation between earnings and market price. In fact, earnings do determine market price over time. And what I've been really talking about actually all week is this idea that, stock price volatility is always going to be with us. And, the point is, if we ground ourselves with the knowledge of what our businesses are worth based on their earnings power and their cash flows, because all businesses ultimately generate their value from their cash flows, and we have a good sense of what that is on each of our portfolio holdings, and we don't let market volatility worry us. But the key to do that is to understand the importance of earnings. So I'm going to look at 3 or 4 examples here this morning and just show you how important earnings actually are. The first is Affiliated Managers Group, which is a company that aggregates money management firms. They acquire money management firms and then supply them resources and assets. And I want you to notice that from the period 1997, this is a 14-year chart, through really the end of 2007, this company generated very strong earnings, which is the green line with the white triangles. And you can see the stock price, which is the black line, as I pointed out in yesterday's blog, is more volatile, but you can see the trend that certainly tracks earnings over the long run. Then coming into the recession, obviously, we had this poor performance, and, these firms are paid on the value of the assets. They charge a money management fee, so obviously with the market collapsing, their fees went down, and of course the market overreacted. But I do want you to notice how, the stock price is moving now back to its earnings justified level. Technically, the price should have followed this line perfectly. This was simply, fear exasperated that. But of course, any time where the stock was overvalued, that was also a point where it would eventually come back to earnings. So the importance of earnings can really not be, really overemphasized here. Earnings are critically important in the process. And then there's also a correlation between earnings and market price and portfolio value over time also. What I mean by that, if you look at Affiliated Manager Group, they generated 19.8% earnings growth, and that's even with a drop in earnings here, but the stock price has recovered, but it would be technically undervalued. This stock would normally be trading at around $85 a share, and of course it's trading at $63. So given that, shareholder returns are still going to have a very strong correlation to what its earnings power has been. $100,000 investment in Affiliated Manager Group, starting in November 28, 1997, and held through 8/25, or yesterday's closing price, would have generated an 11.9% compounded rate of return, which is significantly better than the less than 1% that the S&P 500 did. Now, financial stocks are certainly in the news, so I thought it would be appropriate to kind of focus on some financials here. This is, Citigroup, one of the largest conglomerate financial institutions, investment bank in the world. And you can see there was a period here starting in 1991 that, all the way through the end of of calendar year 2006, where Citigroup's earnings were actually quite strong, and you can see once again that their stock price correlated with their earnings, very, very closely. And there were periods of a lot of volatility here, but this is the point. When stocks are falling from being overvalued to being undervalued, that's the dangerous time. But the most dangerous of all is when the fundamentals deteriorate. You can see that Citigroup's earnings fell off a cliff, and this again is the importance of earnings as the theme of today's blog, and you can see where stock price collapsed, and of course, the rate of returns here were losses. So obviously, earnings do determine market price, and they're critically important. My next example is Janus, the mutual fund company. I want you to notice here where their earnings have really been actually quite poor, going back since calendar year 2000. They only have an 11-year history here. And I want you to notice where earnings were falling and stock price, of course, followed that. Then we had a little rise in earnings and stock price rallied. Then, of course, we had the fall and stock price fell. But it did come back to its earnings justified line. But the point is, earnings determine market price. And in this case, there's no earnings growth, but yet the stock price still correlated to what the earnings of the company did. And my final example for today's blog is Affiliated Computer Services, a company that provides software and business process outsourcing to company. And again, I want you to notice they had a very excellent and very consistent, earnings growth. There was a flat period, from in fiscal year 2005 through fiscal year 2007, but their earnings growth is accelerating again, and expected to accelerate. The company's average 18.5% growth, and I want you to notice that their stock price followed that. And this is the importance of earnings. When the price strays from earnings, inevitably it comes back to earnings, as Peter Lynch said in his quote. You can see the importance of earnings on any chart that has the stock price correlated to earnings. And of course, that's exactly what these charts are. And right here, I would argue that as these earnings continue to build, then currently this company would be undervalued. So the key is, if we focus more on the smooth line here, as I talked about in yesterday's blog. We're going to make better and more sound decisions because obviously it really comes down to the strength of the business. Market volatility is a reality. We can't avoid it. We certainly can't predict it in the short run. There's really nothing to tell us what was causing all this jittery movement in affiliated computer services during this period of time. But I can tell you if we get the earnings build here, it's my opinion that the stock price will eventually have to come to its earnings justified level. Always has and always will.